Hey, it's Wednesday, January 18th, 2012. It's 4 o'clock p.m., so U.S. markets just closed up recently, and just doing like a end-of-day review on pretty much what we're seeing across the board here. So, looking at dollar CAD first of all, looking at a 4-hour chart, you can see we had some uh, pullback here into a area where we were looking for potential support. Um, the range hasn't resolved just yet, but it does look like we had an initial push up, and then it at the moment it seems like we are going to break to the downside here. So looking at our trade, our stop is below this next swing low. If we do break that, then that'll be the end of the trade. Um, so looking at it from a daily perspective, if we adjust this trend line to that swing point and to the extremes, you can see that we're, if this candle does close bearish in the day, we'll manage to break this trend line, which has one, two, three, four hits now. But again, it's important to remember that a lot of times you don't really have a breakout until you break the previous swing point. That's the reason why we're willing to risk a little bit more on this trade, and not be stopped out until the market can show us that there's enough people willing to sell that they'll be willing to offer this lower than this extreme point right here. Moving to the moving over to Euro USD. This is a daily chart. You can see that we've had since the beginning of the week. It's just been pretty much movement to the upside here. Let's go to a weekly chart real quick to look at how how the weekly pattern is developing. So this was the breakout candle right here of the head and shoulders. You can see here, and then and so at this point we've had a pullback to the neckline, and we've seen selling off of that. And after looking at this action, this recent action, you can see that we're seeing a second push back up to challenge the neckline. Um, I have moved my stop down a little bit, tightened it up just above this level. In the near-term action, I think that if price does um, continue up, then the odds of seeing a near-term squeeze are more likely than not. And so, um, a couple of things I want to talk about here. The first is this near-term trend line. This is an hourly chart going through here. You can see prices coming up and challenging that. It's also challenging the neckline. So, if sellers do intend on holding price down, they'll, most likely, um, this is the most logical place to actually see the selling taking place. If price does manage to break higher than this swing point right here, there'll be plenty of stops, including my stop, and that will take me out of the trade in the near term. Now, interesting thing here to note is that this level right here is actually the high of the weekly candle, which signaled the trade. So um, this is one thing I'm sort of struggling with is does it make more sense to put a stop up here, or to move it to the most recent swing point, which is very clearly here, and we also have a couple levels um, of resistance, coming through here. So there is reason to believe that if price does break this level, then this could pretty much be an air pocket. It could fill up very quickly. But on the other side of the token, I guess the argument becomes, well, if you have a stop here and price does have a little fake out and continues a trend, then you're left on the side really. So it's a tough decision, but I'm trying to think of how I want to structure this so that I'm able to take advantage of this trade, but at the same time limit my risk. So one potential idea is taking a 1/3 position right here, um, and then using a wider stop, and again leaving this trade, this trade of head on, as is. So I'm not going to mess with that because I had a plan going into it, and I followed the plan thus far, and it doesn't make sense to deviate from that. But putting on a separate position, taking let's say 250 tick stop loss on that one, um, and on this one taking, like I said, 1/3 of the size of the original, and putting a stop of the weekly point. That way, I still have skin in the game in the event that this market respects that weekly breakout and continues to the downside. So, I mean, there's a lot going on there, but this right here is the initial trade, and the stop for that right now sits right here, and then this is the secondary position I put on, and the stop for that is right here. This stop is going to get moved up to here, and then the stop for this one will probably get tightened up so that it's just above this high. Again, I want to give a little bit of room so that if price does kind of focus head above and take in some longs and shoot back down, I want to be still in the game. But if it does move to the point where it becomes obvious that it's got some legs, then I want to be out. Okay, moving on to cable. This one had pretty much the exact same setup, really, but as you can see, we didn't have a breakout on the weekly chart, and so there's no entry. As of right now, price is bouncing back very nicely off of the support level, and anybody who might have gotten in early is in trouble right now. So again, this is a great pattern. Still like the pattern. As long as this price doesn't breach this shoulder right here, I'll be looking to take a breakout on the close of the week when and if it occurs. Taking a brief look at the Aussie dollar here, you can see that this was a trend line we were discussing earlier. Price did manage to break this near-term resistance. Actually, I wouldn't call it near-term because we do have some support back here, and then also you can see respected back here. So as of right now, price is breaking out of the horizontal level, but it's still well contained by the trend line. This is a weekly, this is a daily. One thing we discussed the other day was the possibility of a fake out here, and if price did re-enter this range, then it would take all the longs with it and cause the maximum amount of pain. We haven't seen that just yet. Moving to a 4-hour chart, you can see that as we broke out, this level of prior resistance was well respected as support and is still holding up. If we can see a 4-hour close below this swing point right here, at that point it may be a signal that that longs are in trouble and that price may re-enter the range here. And the last thing I wanted to look at was the Euro Aussie. The reason I pulled this up was not because there's a setup in here in particular, but more because one thing I'm noticing is the positions I have on in dollar CAD and Euro USD are longer term positions. So one of the the downsides, I guess, of that is you are constantly paying the rollover fee, which is simply because you're so to put it simply, the euro pays more interest than the dollar does. So if you're short this currency, you are buying dollars and selling euros. Therefore, every day at rollover, you owe the differential in interest. So if it's a day trade, if it's for a few days, not a problem. But if you're planning on holding a position for a few months, it could add up to a very significant amount. So one thing that I was kind of pondering was, well, why not take it in a currency that will pay you to have the position on? In this case, that would be the Euro Aussie, because the Aussie has a much higher interest rate than the Euro. So therefore, just from the fundamental bias of the carry trade, the bias is always the downside as long as that relationship holds. And so, if I had taken the same trade, if I had taken the euro setup, euro USD setup on the euro Aussie, my entry would have been on this day right here, and you can see that the move was also more extended to the downside. So, that's something that I'm kind of toying with. Perhaps maybe just taking half of the position on Euro USD and the other half on Euro Aussie. That way you're paying for the swap. But again, there are other factors that could come into play because we're talking about a completely different currency here, being the Aussie, Australian dollar. So yeah, that's pretty much what's going on the FX book. Looking at the stock market, this is a chart of the S&P 500. Let's pull it up to a 3-month chart. So today we had a breakout here, which is fairly legitimate. You can see we broke the range and we closed at the high of day. That's always a good sign. I do expect this to continue. We have this trend line here, but I think that the momentum we're seeing is going to be extended. But again, it's important to keep these lines on the chart. You never know with the markets. Something like this could hold and cause price to essentially reverse. So at this point, breakout, I do think price will move up. But if we do manage to come back and let's say we close below the, let's call it 1275 level, at that point, it's a cause for concern, and I think the bullish scenario is in trouble. In terms of individual stocks that I'm trading, Bank of America, still long Bank of America. We had this pullback here, this classic pullback we talked about. We had a potential entry here, and yesterday was a very nasty close. My stop is now sitting just under this low right here. So if price does decide to roll over, I'll book a profit, and that'll be it. But if we do continue, I'm looking for the roughly this swing point up here to take profit. So maybe 7.25, 7.40, somewhere in there. Other position is Walmart. Pretty slow today on this one. Although we did have some upside movement, we broke 60, closed above it, which is good news. Stop is sitting below this candle right here. Pretty much looking for the range to resolve. And since the entry or the prior to forming the range, price is moving up, the odds are that will be the direction of continuation. If again we do close below the 58.50 level, then that will be a cause for concern. So that wraps up pretty much what I'm looking at, the trades I have on, and an update for the day. Thanks for watching.